Hey everybody, Sami here with the Strategic Swing Trader newsletter. Welcome to this weekly video. In this video, I provide an analysis of the current market environment as well as share with you some of the ideas, the swing ideas for next week. Some of the ideas, the best ones, I will be taking myself. I've actually already picked the plays and drafted the newsletter for Monday. Others I will just watch and see how they set up on Monday. So that's what I do in this weekly video. And I start off by looking at the market. So let's go ahead and do that. The Qs got to on the way back up, got to an area on the weekly chart where I thought we could see some selling. Okay, we had a 50% retracement. I'm taking out my annotation tool. So from here to here is about 100%. To here, that's about 50%. Also to the minor resistance, the bottom of the base. This bottom of the base is minor resistance, the declining 20. So this was the natural area to see some selling, especially after getting a wide range bar, right? So that's expected. The problem is we ended the downtrend, or we broke the downtrend on the daily chart by failing on the sell setup. We put in a higher low and a higher high. So it's not going to be smooth sailing again like it was in the entire month of October. I don't think. The weekly chart is at an area where we should see some selling. The daily chart says nope, neutral for the time being. If we look at the monthly chart, my target on the monthly Qs was 160. I said that several times in the black room. We got to 160.09. So we got right to the target. So I think now would be the time to, so we've seen what the bears have in store. Now we will see if the bulls can generate a bounce back up, which I don't think they will be able to, or if the bears take us lower. Usually if you have a rising 20 below price, we don't just fall apart. We drop into it, generate the bounce, and then from there maybe go sideways a little bit, maybe drop one more time and then go sideways, because that moving average needs to flatten out before we can expect a severe drop. Okay, usually you need the moving average to flatten out and start pointing down, like we saw happened on the weekly chart. The market didn't just fall apart, it based for, after the top that we got here, it based for several weeks, for about a month, for 4 weeks in a row, and then it broke down. Notice the moving average also flattened out, started to go sideways, and then we had that big sell-off. So on the monthly chart, I would say the same here. We need to see the market maybe base for the next several weeks, couple months, several months, I mean, because this is a monthly chart. Each bar takes a whole month to form. And then if we were to break down, there's nothing to stop the market from retracing all the way back down to 120. I mean, there's basically virtually no support. This little support that was from February, I think. No, April. Well, February, and then we retested it in April. So there is a little bit of support there, but that's not much. And then all the way back down to 120. Will we get there? Who knows? Only time will tell. We monitor the market day by day, week by week, month by month, and then we try and be objective, right? So that's the way to do it. Those that make wild predictions are usually not there to see them come to fruition, because when you make wild predictions, usually what that means is you're not trading in a methodical, objective way. And so you basically, if you're wrong, you go bust. Whereas if I'm wrong, I adjust along the way and I make little adjustments and correct based on the information that becomes available to me as price action, as prices candles form. All right, so that's my take on the market. Again, the weekly is at the right spot to drop a little bit. The daily is a mess, so we need to deal with this here, right? And then the monthly is at support at the rising 20 at least, so we need to base. So I'm thinking for the foreseeable future, we go sideways. Okay, We'll see how we deal with this. This is kind of the main area to see how which side wins, the bulls or the bears, and then we'll go from there. All right. So wanted to switch gears and look at some of the ideas for next week. I have a lot because I scanned my entire universe. At the end of each week, I scan my entire stock universe on daily time frame and weekly time frame, but it's also the end of the month, and so I scanned my entire monthly I scanned my entire universe on the monthly chart. So AVP, as you can see, was in an uptrend, went sideways. Moving average is now curling and pointing up. If we look at the weekly time frame, it also has a transition A buy setup. So that's not bad. I like it higher. AVP over the base. All right. ENT is the same idea. I always like it when the stock bases like so above the 200 MA. So this is the same kind of idea as the AVP, except it's actually better. Let's check on the weekly. Weekly is good. Let's check the monthly. Monthly is great. It's based long enough that it can now break out. Do you see what I mean when I said about the market that the moving average needs to flatten out if we are trending? And here, ENT, trending down, we the ENT got bought and then based for several months, and now perhaps it can break out, but it doesn't. Usually they don't just keep going, right? They base for a while and then possibly later on they break out. So the ENT is the same concept, which is a transition A breakout, as the AVP, except in my opinion it's better. The GSKY, possible retracement rally to 12 bucks maybe on the GSKY. This was a big gap after a severe sell-off, so it can bounce. I'm waiting for some tightening in this space because it's a big base. I always have to think about the reward to risk, and so if I were to enter here, the stop would have to be way down here. That's a big base or a thick base. So I'm waiting to see if it can tighten up a little bit before playing it, but it's going to be a watch for next week. H and GR is just a simple, beautiful weekly buy setup. Just a beautiful weekly buy setup off minor support, rising 20, so over the base, top under it, but very thin. INSG is also a weekly buy setup with a daily 1, 2, 3. So 1, 2, and then if we break out, it will be 1, 2, 3. NOMD had an igniting gap but got sold and now has an hourly base breakout. So that's not bad. Over the base, stop under it. ONDK is, I was in this stock a while back, and I don't know exactly where I sold it because of the monthly. I mean, that is such a beautiful monthly chart. ONDK, transition A on the monthly. I'm in FEYE, FireEye. It's the same exact idea. See how the moving average flattened out? It paced for 3 years or so. And so the same here. This one already gapped significant amount and I wasn't in it, but possible play over the base here. All right, so that's what I'm watching to get back in it. PBYI, I'm in the CLVS, which is a stock that's been crashing, right? And then it had the gap down, had the volume, and then the breakout, right? I'm hoping it gets to 20, except some news came out on Friday and it got hit a little bit. But I raised my trail already to in the money, which is 14.10. So a 15.10. Under 15.10 I'll be out. If it takes it out, then I'll be out. My target was actually 20 bucks. So PBYI is the same exact idea, except it's even a better base. So base breakout, target would be the declining 20 on the weekly chart. PGTI is a daily buy setup. Probably the PGTI, I will check. It might be also a weekly buy setup. Not really, not a very good weekly, but is an okay daily. SCG is a daily breakout, not very tight. The base weekly looks good. Transition A on the weekly chart, and hourly also looks good, right? So those are the 4 key time frames: hourly, daily, weekly, and monthly. The daily is for finding the pattern. The hourly is for finding the correct entry. The weekly and the monthly are for a larger time frame perspective. They don't have to be set up, but you don't want the daily to be conflicting or in conflict with the weekly or the monthly. That's all. So the daily is where I find the pattern, the hourly is where I look for an entry pattern, and then the weekly and the monthly are the larger time frames where I need them to, if not set up also, I need them to be in sync with the daily chart, at least in this, all pointing up or all saying higher rather than one saying higher, the other saying lower, right? Let me fix this chart real quick. I need to get back to the hourly chart, so let's do that. Let's add some data. 35 days usually is good for an hourly chart. SWN is a transition A on the monthly chart. Oil got hit very, very hard in the last couple of weeks. This held up. So this would be a transition A on the monthly chart. I like it a lot over the base, over $6. UNH is, I mean, the strongest stock in the world, isn't it? Look at this. Unbelievable. Looks higher on a 1, 2, 3, 4 on the daily chart. Looks higher on a 1, 2, 3, 4 setup. Shorts, I have just as many, actually more. AIG is just a simple daily sell setup. Retracement back to the 20 on the daily. Nice hourly rollover pattern. Wide range, wide rounding top, right? A wide base. AMR is a daily sell setup also, right off the declining 20. Better hourly chart and right off the declining 20. COMM is a 1, 2, 3. 1, 2, and then if we break down, it'll be a 1, 2, 3 play. DHI is the same, exactly 1, 2, 3. EFX is a sell setup plus a 1, 2, 3. So under the base, stop above it. Like it. I like the EFX. ELVT, hourly base breakdown. Nice rounding top also. Every rounding top always has a breakout failure in it. Every rounding top has a breakout failure. Always. That's what creates a rounding top. So under the base, stop right here. Okay, on the ELVT, but it's very thin. G Pro is a 1, 2, 3. Short. Okay. Groupon is also 1, 2, 3, 4. 1, 2, 3, and then if it triggers, it'll be the fourth bar. So that's called a 1, 2, 3, 4 setup. IBM is a beautiful daily sell setup right off the declining 20. What I don't like about the IBM is it came from a double bottom. The more candles at the bottom, the stronger the support. When you're looking to play short, you want a V bottom, not a rounding bottom. So you want 1 to 3 candles at the bottom. You want 1 to 3. So that would be 3. Oh, okay, so 1 to 3. That's 4, 5 at the bottom. IVC is a breakdown. It kind of triggered already on Friday, so I'm going to let this one go or let it base a little bit more on the hourly chart before playing short. NWL is a rollover pattern on the hourly chart. It's a base breakdown on the hourly. Target would be around 18 bucks. OMI is a beautiful base breakdown on the hourly chart, but also a nice daily. Very tight. Usually when they're tight, that's when you want to look to play them because then your reward to risk is high. And also, explosions don't come from loose patterns. They come from, or big moves come from tight patterns. They don't come from sloppy, choppy patterns. So this is a pretty tight base on the daily chart. Pack W is a daily sell setup. Nice hourly. It'll be a short under triple bottom or 3 pivots. That would be the entry. Stop above the double top. So that's not bad. Kind of a secure stop up here. PRGO is a 1, 2, 3. I don't play the 1, 2, 3 pattern until on the daily chart and unless and until the hourly 20 MA catches up. As you can see, I only use 2 moving averages, the 20 period moving average and the 200 period moving average on every chart. So the 1, 2, 3, if it's not off the daily, then I wait for the 20 MA on the hourly chart to catch up first. Salt is a monthly breakdown. Looks really good on the monthly chart. Let me open up the chart so you can see it better, or just change the scaling a little bit. So this looks good on the monthly chart. Do I love the daily? Absolutely not, but it's off the monthly. So I'm willing to play it under the lows with a stop way up here at 675, I believe. Yes, 674. And wait for the monthly chart to kick in and get it going. Shack is a gorgeous looking daily sell setup that's coming after a powerful gap down, very close to the declining 20. Beautiful hourly chart under the base, under this pivot. Here's the problem with the Shack. I just want to show you the monthly chart. Monthly already reached support, or already reached the rising 20. So here's an example of when the daily is in conflict a little bit with the hourly. Now the thing to do is one can still do it as long as there's enough reward to risk between the entry. This would be the entry, that would be the stop, and this would be the target. Wouldn't expect it to continue much lower because the monthly, as I said, is already at the rising 20. So if there's enough reward to risk to the prior pivot low to right here, then one can do it. And VNTR is just a simple base breakdown on the daily, but also on the hourly. Under the base, stop above it. I already picked the plays, as I said, and drafted the newsletter for strategic swing trader members. And so I already picked the plays with the entries, the stops, the targets, all of that. And we'll be sending it out Monday morning, pre-market. But these are the plays that I picked are from this list, from these two lists. So study them, see what you like, and best of luck. Thanks for watching. I hope you have a great rest of the weekend and talk to you sometime soon. Take care, everybody. Have a good night.